law. So the natural sort of follow-up to landlord-tenant law is property management, and that's what we're going to cover right now. And this is one of the shorter chapters. And I told you in the second half of the class there were quite a few chapters that are really, a lot shorter, and this is one of those. And you'll see quite a few of those. This is one of those shorter chapters. Then chapter 16 is super short, basic residential construction. Chapter 18, which is taxation, is short. The environmental chapter is super short. So there are quite a few chapters left to cover, but you'll be shocked at how quickly we'll click off several of them. There are some heavy duty chapters left. So for next week, you really need to spend some prep time getting ready for the finance chapters and valuation. But you're getting down to the point where you don't have a lot of heavy information left. So it's a good thing, right? You're almost, your brain is almost full, right? Are y'all like full up to the top? You got a little bit more we have to cram in there. So property management is the brokerage service that we render to landlords. When we represent sellers, we call that listing. When we represent buyers, we call that buyer agency. When we represent landlords, we call it property management. And property management is a little bit different than the other types of agency that we talk about, because property managers have more authority to make decisions than we do as agents when we're working for buyers or for sellers. Property managers are expected to manage, to actually make the decisions about a number of things. One thing to know specifically about North Carolina, look at this part of this statement here. It says only non-provisional brokers can be engaged as property managers. Now, that does not mean a provisional broker can't help with property management. They can. They can work on property management accounts, but they cannot be the property manager. And the reason a provisional broker can't be the property manager is because of that decision making. Property managers are expected to make the decisions on how much to charge for rent, what tenants to accept, whether or not to evict a tenant, what maintenance to do on the property. All of those are decisions that sometimes lay with the property manager. We don't want to give that much decision-making authority to a provisional broker. So what we say is that if you're going to serve as the property manager, the primary property manager for a property, you need to be non-provisional. The purpose of a property manager, if you're asked on a test, is to maintain the value of the property while generating the highest possible income or return for the property's owner. Basically, you become like the property owner. You're looking out for the best interest of the property. What is in the best interest of the property, both right now and long term? And that's where the maintenance part comes in, that long term sort of looking after the property. One of the terminologies that you're going to have to familiarize yourself with for the property management section is what is an operating expense. Operating expenses are basically everything that a property manager would spend money on. You name it. If the property manager is spending money on it, it's an operating expense. The property taxes, like the real property taxes every year, if you're managing property, that's an operating expense. The maintenance that you do on the property, that's an operating expense. Any salaries that you pay. If you pay yourself a property management fee, that's an operating expense. Utilities, insurance on the property, all of that falls in this one big bucket of operating expenses. But I'm going to point out one thing that's not on this list. And we'll write it here in a different color. One thing that is not on this list. Not mortgage payments. Could these properties that we're managing for these owners have debt? In other words, could they have a mortgage on them?
Yes.
Absolutely. Very commonly they do. This is the one check that a property manager would write that's not going to be considered an operating expense. You need to know that for the test. So not mortgage payments. Everything else that a property manager spends running that property, except, and another word for mortgage payments is called debt service. Debt service. You are servicing that debt. That's not going to be considered an operating expense.
Hey, I have a question.
Okay, go ahead, Justine.
Because I'm in property management, and it's kind of on the first slide that you did about the non-provisional. Because I've seen some companies that require you to have your like real estate license, but I've also seen some that they don't want you to have it. Is it based off of where like the property management company itself is out of, or where the property is at?
It's where the property is located, but remember also, there's no requirement that a property manager be licensed at all if they are salaried. Remember, one of the exemptions to the licensure rule is the salaried employee of the owner of the property. So a lot of property managers are not actually licensed at all.
And they have trust accounts, even if they're not licensed?
Yes, you do not have to be licensed to have a trust account. Anybody can open a trust. A trust account is just a checking account. That's all it is. It's just a checking account where you keep other people's money separate from your own money. And you just label it as trust account to clearly tell everybody this is not my money. Did that help answer your question, Justine?
It does a little bit. I've only seen like one company. It was a company that I had interviewed for at the beginning of the year, and they required all of their employees to have their real estate license. So that's why I was like,
and that's just an internal decision. Yeah, that's just an internal decision based. They decided that. They could have gone the other route if they're employees, if they're W-2 salaried employees, they could have hired unlicensed people, but that's their choice. They don't have to be licensed.
Okay, I got you.
Okay, but some choose to have. If I was hiring property managers, I'd want to hire licensed ones because I'd be less concerned they would make mistakes. I'd be more comfortable they knew what they were doing. So, but
Travis, can you back up one slide for just a second?
Sure. That one?
That's right. Okay. Thank you.
Yep. So basically on that slide, everything that a property manager would spend money on is an operating expense, except any debt service or mortgage payments. Okay. Now, as far as the agreement, remember we always need an agency agreement. We can't get paid unless we have what kind of an agreement with our client?
A written agency agreement.
A written agency agreement. We need a listing agreement if we're going to represent the seller and get paid. We need a buyer agency agreement if we're going to represent the buyer and get paid. If we're going to represent a landlord and get paid, we need a property management agreement. It's got to be in writing. Otherwise, we don't have any entitlement to compensation. One of the things that's most important in the management agreement is how much power the property manager has. In other words, can the property manager decide on maintenance, or do they have to go to the landlord every time? That should be in the property management agreement. Can the property manager decide to evict a tenant, or do they have to go back to the landlord every time? That should be in property management agreement. The other thing that's important to put into the property management agreement is how are we going to calculate our fee? How are we going to calculate the amount of money that we owe? And so how should the fee be collected or calculated? The most common method is a percentage-based method, sort of like the sales commission, but the percent of rent collected is the most common one. Percent of rent collected. Why do you think percent of rent owed is not as common as percent of rent collected?
Not everybody pays their rent.
Not everybody pays their rent, and the property owner doesn't want to pay us for rent that we did not.
That was not paid.
collect.
We did not get paid.
Exactly. Okay. The other thing that the property management agreement should make a point of stating is how often do we have to give financial reports to the owner? How often do they want to see the financial performance of the property? Some owners only want to see it yearly. Some want to see it monthly. Some want to see it every quarter. So it's really up to the owner how they want to see their financial reporting. I'm going to skip over this slide because you don't need to worry about that. You need to know the difference between something called an operating budget and a cash flow report. Here's what I will tell you. They are exactly the same thing, except they're called two different things based on when they're done. As a report, they're exactly the same thing. An operating budget is a prediction of what you think the revenue and expenses will be. What do you think the cash flow report is?
How much was actually spent?
How much it actually was. Exactly, Justine. It's so the operating budget would be something that you would give to the property owner in advance and say, this is what I think next year will look like. The cash flow report would be a report that you would give at the end of the year to say, this is what the year actually was. That's the only difference between the two. But the reports and the math look exactly the same. Now, I will tell you, one of the greatest things they ever did for you all in this class is eliminated you having to do the math of a cash flow report.
Oh, wow.
So you don't actually have to calculate cash flow, which you used to have to do. But that is a double-edged sword, because what they do expect you to still know is the formula for calculating cash flow. They expect you to know how to calculate it, even if they're not going to give you a math question for it. And this is the formula for calculating before tax cash flow, or just cash flow. Does it look complex here? Pretty
Yeah.
involved, long, lot going on there, right?
Yeah.
Would you like an easier way to help you remember this formula?
Absolutely.
Of course.
You don't have this next slide in your slide package. So I did put it on the OneDrive. It's in the math worksheets folder on the OneDrive, but you could also take a picture of it or something if you wanted to when I go to this next slide, because you don't have Violet in your slides. And you need to get to know Violet, because she is going to help you remember the before tax cash flow math formula. Here's what you're going to have to memorize. Puppy Violet eats Oreos, not dog biscuits. That's what you're going to memorize. Puppy Violet eats Oreos, not dog biscuits. I don't blame you. I like Oreos a lot better too. And here's what that refers to. The P in puppy stands for potential income. The V stands for vacancy. The E stands for effective income. The O stands for operating expenses. The N in not stands for net operating income. The D for debt service, which is the mortgage payment. And then the B for before tax cash flow. Okay, so Puppy Violet eats Oreos, not dog biscuits. That will help you keep this formula in order. Now, I'm going to back up a slide here. The good thing about this formula is it's just this number minus this number equals this number, minus this number equals this number. It's always alternate, subtract equals, subtract equals, subtract equals. So if you look at the formula, it starts with potential income. So that's where the P comes in, right? So puppy, potential. So here's what potential income is. It's the maximum income we could collect if all the properties that we were managing for this person were occupied and every tenant was paying their rent on time. As a property manager, we also call that fantasy land because it never works out that way. You always have somebody who's either not paying or not paying on time. Does that make sense for everybody? But we're not going to worry about those people who are not paying on time because this is potential income. It's what we could potentially produce. And that's our starting point. And that's why everything's minus, because we're going to start going down from here. This is the most we could hope to produce. And it's going to go backwards from here. You with me so far? So it's potential income and then minus vacancy. So there's your V, vacancy. Vacancy just means rent that you did not collect for any reason. Either the units were vacant or there were people in the units, but they were not what?
In the rent.
They're not paying.
Hey.
They're not paying, exactly. So that encompasses your vacancy. Gross potential income minus vacancy equals gross effective income or just effective income. Effective income is the rent that was actually collected by the property manager. But we have to pay our expenses. So we're subtracting again. Minus our operating expenses, and we talked about what those were. That's pretty much every expense the property manager pays, with the exception of which one?
Mortgage or debt service.
Not operating expense. Good. Very good. Okay. So we're going to subtract all our operating expenses, and then that brings us down to this number right here. Net operating income. Net operating income is the amount of money that we produced by managing that property before we paid any mortgage notes that were outstanding on. There's only one thing left to pay. What do you think that is?
The mortgage.
A mortgage. And what's another word for mortgage? Debt
Debt
service.
service.
So we subtract the debt service, and that equals our before tax cash flow. So this is before the, so this is the spendable money. Another way you can say that is this is cash to the owner.
That's what the landlord gets to keep.
That's what
At
the
the end.
landlord gets to keep. That's what it, so at the end of the year, after we manage the property, this is the check we send to the landlord. We send all these other payments to everybody else. We pay the maintenance, we pay the expenses, we pay the mortgage, we pay everybody else has been paid. Here's your check at the end of the year, Mr. or Mrs. Landlord. There's your before tax cash flow. And the reason it's called before tax cash flow, because sometimes people get confused and they say, well, wait a minute, taxes. These are the real estate taxes up here. What taxes do you think we're talking about down here at the bottom? Before the owner
Taxes, income, tax.
before the
Income
owner
taxes
pays
for the
income.
owner.
These are before the owner pays income taxes. And we don't worry about that as a property manager. That's for them to figure out.
What might the question on the test look like?
The question on the test will be some variation on the formula. It'll say, you know, what would be the, which of the following is the best way for a property manager to calculate a property's net operating income? And you'll have to be able to get the one that puts these in the correct order.
And we can't just spell out the puppy violet thing.
Well, you can.
Travis.
Trying to help yourself out for sure.
I have a question.
Go ahead.
So obviously it's going to be multiple choice. So
Yeah.
all you have to do is just basically memorize the puppy violet little thing phrase you have, and then just it'll have the names on the multiple choice though, right?
That's exactly right. That's
Oh,
exactly.
well then that'll work. Good. Okay. That's my
That's all
question.
you're gonna do. You don't have to actually know how to work with the math. You just have to be able to deal with the formula. So if they said to you, you know, which of the following is a formula that a property manager would use to calculate net operating income, and one of the answer choices was you take the gross potential income and you subtract the operating expenses and the debt service. Would that be the right answer for net operating income, or would that be too many things to subtract?
Too many.
That'd be too many, right? Because net operating income is before you subtract the debt service. So that's the kind of question you're going to get from this. This can't just, do you know this formula? Do you know this progression of things?
Could you say gross potential income minus gross effective income equals the operating?
No.
No, that doesn't work.
That
You
doesn't
have
work.
to go through the steps.
You have to go
Okay.
through the steps. Yep. Yeah, you have to go through the steps.
Got a
Okay.
question for you.
Okay.
So whenever, like, I was looking at this and reading it, I understand this, but then I was thinking about how, like, we do things at the real estate office, and like whenever we bill out or we give our owners their statements each month, it has our property management fee, which the least amount that we will do is $100 per property. And then, so, or the least amount we'll charge, I'm sorry. And then the rest of the time, they get the remainder of what their rent will be. So like if the rent is like $1,100, we take out $100 for our management fee, and then the owner gets that $1,000, and they're responsible for, you know, making their
Other payments.
their other payments and stuff
What I
like
will
that.
tell you is that when you get into bigger volume property management, where you're managing, 100 units for one owner,
Yeah.
they would expect their property manager to do all of that. They don't want to pay the property taxes. They don't want to pay the insurance. They just say, send me a check at the end.
Okay.
And
I
so
was like, right.
it does depend on what type of property management agreement you have.
Okay, because I know like we have a gentleman who is local who literally buys hundreds of properties, and he splits it into his kids' name to build a college fund for them.
Yeah.
And so like we manage all of those properties, but they're in each of his kids' names, and then he's got some in his wife's name and then some in his name.
I'm really surprised he hasn't asked y'all to take over managing the entire cash flow, because that's usually what those.
I think he probably is, but he just went and got his real estate license, so I don't know if he's planning on taking over it
Gotcha.
or what. But I just didn't know if you wouldn't even do that same like equation with something like that where you're not having to take care of.
Well,
like,
you
right,
might do an adjusted version of it. And they would understand they still have expenses to pay once they get the money. But this is how the ultimate accounting gets done.
Okay, gotcha.
Okay. All right. How do we calculate a management fee itself? Well, that's just going to be the gross effective income, which, remember, we said gross effective income is the same thing as rent collected. Because if you go back here and you look at gross effective income, it says that you take the gross potential and you subtract the vacancy, and that equals gross effective. That's why it's rent actually collected. So to calculate the management fee, if you were doing that math, it would be the gross effective income or rent actually collected times whatever the rate is. So, a lot of property managers say we charge maybe a 10% rate. 10% of rent actually collected becomes the management fee. And that's how you calculate a management fee. Again, probably not math they would ask you to do anymore. Math they used to ask you to do, but math they would not ask you to do now. But you need to know the formula for it in case they throw it out there as a test question of, how do you calculate a property management fee? Well, it's the rent actually collected, or gross effective income, times the rate. How do property managers decide how much to charge?
Can you go back one slide?
Sure.
I'm sorry.
No,
So
you're
it's
fine.
gross effective income times the rate.
Correct. So you would be paid a percentage of the rent you actually collect as the property.
Yep. Yep. And that equals the potential income. Property management fee.
That's the property management fee. That is correct. So like, for example, if I am managing an apartment complex and I'm charging a 10% management fee and the gross effective income for the month is $100,000, that's the rent I actually collected for the month, and my management fee for the month would be $10,000 if I was charging a 10% management fee. All right. You may see test questions, and I told you this chapter would be very short. There's not many potential test questions, quite honestly, they would ask you from this chapter, but you may see test questions about how property managers go about establishing the amount of rent that they should charge to tenants in a particular property and what would impact that. And there are a lot of things that impact it. However, I want to rank them for you as far as importance, and in case they ask something like that on the test. Like, what if they ask you, what's the number one thing that a property manager should look at when setting their rental rates? This is number one right here. What others are charging in the area, what the competition looks like. That's going to be the most important factor in determining how much we charge as a property manager rent. And if you think about it, that just makes sense because you're in competition with those surrounding properties. You're competing for the same tenants. So that's going to be the biggest determining factor of what you can charge for rent. Other things that impact it are vacancy rates, are we paying for our expenses, all of those things. But definitely number one biggest factor is going to be what are the prevailing rates in your area? What are other properties that you're competing with charging? So if they ask you to sort of rank that on a test, I would say that'd be number one as far as dictating what you charge. Some things the other things they like to ask you on the test are what are the responsibilities of the property manager and what are not the responsibilities of the property manager. All of these things would be expectations of property managers for most properties. Market the property, so find tenants. That's huge part of the job. Choosing the tenants, so taking the applications, looking through the applications, deciding which tenants to accept, which tenants to reject. That would be a big part of the property manager's job. Collection of rent, as far as the owner is concerned, this is probably the biggest part of a property manager's job because most owners who hire property managers have tried to do it themselves before and they found themselves struggling to collect rent. And that's why they hired a property manager. They want us to be the bad guy. That's why you should never get into property management with a soft heart. I worry about Brittany. She's not gonna make it. She's too nice to be in property management. You gotta be mean to be in that business. You just gotta be. No, I'm kidding. You don't have to be mean to be a property manager. But
I just want everything to be fair, and I can't. I don't know. It's just. Every scenario that we've done.
I tell you what I got out of it. I laugh about it, but I'm too much of a target. I just had sucker written across my head. I mean, people could cry, and I just was like, "Oh, don't cry," and then they got over on me. So I just had to get out of it. I had one tenant. Her mother passed away while she lived in the property, and then I realized about halfway through the conversation that this was the third time her mother had passed away. See, that was the kind of stuff I dealt with when I was a property manager. So, it was not a good fit for me. It was not a good fit for me. So I had a lady that I worked with, an older agent, and she said, "Honey, here's how you know if you're suited for residential property management. If you can kick a single mother with 3 kids out on Christmas Day, you're well suited to be a property manager. If not, you ain't suited for that business." That's what she told me. And I was like, "Oh, gosh, okay." It is a business that hardens you, though, because there's a lot of stuff you deal with as a residential property manager. So it definitely changes your outlook on things. I think, sometimes. Maintaining the property, huge part of the property manager's job. Performing the landlord's duties. And that means, yes, even going to court in their place. So when there is, if you see a test question about eviction actions, this is kind of one they might ask you about right here. You know, who would go to court and file for an eviction? Who would testify? Who would handle that court action? Would it be the landlord or would it be the property manager? The answer is it would be the property manager. That's one of the functions that they generally expect of a property manager. And then, of course, provide them with accounting for their money. Those are all the functions of a property manager. Now, let me tell you what's not the function of a property manager, the kind of stuff I've seen pop up on tests that people fall victim to. The profit generated from the property, who does that belong to? Does it belong to the property manager or does it belong to the owner?
Landlord, owner.
It belongs to the landlord. That's their money. Don't answer a test question that the property manager gets to spend the profits generated by the property or decide how to invest the profits or anything like that. No. That's their money. Once we have managed the property and created that profit, we send them a check and then they do whatever they want to do after that. Okay, so be careful of that. Be careful of that. Some different types of maintenance you may be faced with on the test. Preventative versus corrective maintenance or repairs. One is done before there's a problem to prevent a problem. The other is done after the problem is known to correct a problem. Which one do you think is more cost effective long term? Preventative maintenance or corrective maintenance? If you're a property
Preventative.
one of the biggest goals of a property manager is to, and most property managers actually keep two different line items. One for preventative maintenance expenses and one for corrective maintenance expenses, because they want to make sure that they're mostly doing preventative maintenance. So preventative maintenance would be things like going in and changing all the air filters on the HVAC system, going in and making sure that the property is well insulated, so you don't have burst pipes or that sort of thing. Pumping the septic tank out so it doesn't back up, but doing it before it backs up. Whereas corrective maintenance would be doing those kinds of things on an emergency basis because something's broken. Corrective maintenance is really cost ineffective, primarily because you have to pay people more when they have to come out on an emergency basis. And so when you're, if I can schedule things as preventative maintenance, I can get somebody to work all day and accomplish 15 tasks and pay them the same amount of money I might pay them for one emergency corrective visit. So preventative is much more cost effective for a property manager. Deferred maintenance is the kind of maintenance we should avoid at all costs as a property manager, and that's maintenance that's never done. It's put off. Deferred means delayed until a later date, because deferred maintenance almost always leads to more corrective maintenance. So just make sure you can differentiate those on the test. We've already talked about the exemption for employees, W-2 salaried employees of both the property owner and of the real estate broker being exemptions to the licensing rule. Don't forget that rule from way back in the beginning. Who needs a real estate license? Well, generally speaking, somebody who's doing any kind of a real estate activity and they're doing the service for somebody other than themselves and they're being paid for it, if they're doing all three of those at once, needs a license. But there are a couple of exemptions to that. And one of those is the salaried W-2 employee of the property owner. And another is the salaried W-2 employee of a real estate broker. So you're probably going to see test questions. I would say this right here for sure is going to show up as a test question in the North Carolina section of the exam. something related to what can a salaried employee of a real estate broker do. And they can do a lot of things. Especially when it comes to property management, they can collect rent, they can schedule showings, they can manage repairs, they can make deposits, they can show rental units that are available, they can balance the trust account. Now it's going to be the broker in charge who's responsible for the trust account, but they can balance it, they can be the bookkeeper, they can deposit money. They can do all of that stuff as an unlicensed assistant. They can place advertisements as long as they don't create the advertisement. It has to be the broker who employs them who creates the advertisement. They can put stuff in the MLS as long as they get the information from the broker who employs them. All that's allowed. But the salaried employees of real estate brokers cannot do two things ever. They cannot negotiate in any way, or they cannot stand, or they cannot show properties that are for what?
Sale.
For sale. Stuff that's for sale. So if you got a test question that said Cassie is the salaried employee of broker Bob, and Bob is holding an open house on Saturday and asked Cassie to hold the open house in his place, can she do this? What's the answer to that?
No.
No, because an open house means the property is for what?
Same.
For
Sale.
sale, and she cannot do that. She can assist Bob if he's there, but she can't be there by herself. But could Cassie show tenants rental properties that Bob was managing that were available for rent?
Yes.
Yes.
Yes, she could. She could. Okay, so you probably see that kind of a question as well. I'm going to hold off on the Americans with Disabilities Act for a long discussion, but I'm just going to mention it here. The ADA, or Americans with Disabilities Act, impacts property managers significantly. And the reason for that is that if you are managing a commercial space, and so may as well just say commercial real estate. If you're managing a commercial piece of property, because notice it says buildings open to the public, you have to follow the Americans with Disabilities Act. The Americans with Disabilities Act requires equal levels of access regardless of physical handicap. And you can provide that access as a property manager in one of two ways. You can either make an accommodation for this person, or you can make a modification for this person. It says here an accommodation is a change in our procedures. So I'll give an example. If I own a restaurant, I probably don't allow animals in the dining facility. But allowing a service animal would be an example of an accommodation I would make under the Americans with Disabilities Act. It doesn't require me to change anything about the property. It just changes my operating procedures. Does that make sense for everybody? Whereas a modification is an actual physical change to the property or structure itself. So if I installed a handicap accessible ramp, for example, because we didn't have an elevator, that would be a modification. If I were to put the rails, handles in bathroom stalls, that would be a modification to the property because it's a physical change. So just make sure you know the difference between an accommodation and a modification. And what the Americans with Disabilities Act says is if you're managing a public space, commercial property, you have to be willing to make either an accommodation or a modification, whichever, in order to provide an equal level of access. Sometimes that choice will be to make a modification to the property, and sometimes it'll be to make an accommodation by changing your operating procedures. Like I use this as an example a lot when I teach this. In my hometown of Tarboro, the post office is this huge granite building on Main Street, and you got to go up like 25 steps to get to it. Huge staircase outside that goes up to it. And the building was built in the early 1800s. There's no elevators in there. So does that present a problem for somebody who wants to go to check their post office box if they are wheelchair bound, for example? Absolutely. And so they had to, because of the Americans with Disabilities Act, either make an accommodation or a modification. And they elected to go with an accommodation. They elected to say, we would rather accommodate these people than change the building, because it would be so expensive, so cost prohibitive to change the building. And so here's their accommodation. There's a sign out front of the post office that says, if you have a disability access related need, please pull around to the rear. When you pull around to the rear, they have a parking spot that's reserved there for those with disability access needs. And there's a buzzer that they press the button, and it's the intercom. It calls somebody who's upstairs in the post office, and you say, I need this, I need to do that. And they bring whatever you need down to you and take whatever you need back up. And that's their accommodation versus modification. So the ADA does not specify which you have to do. It just says you have to do one or the other. And you see this in effect almost everywhere you go. How many of you, I'll tell you one thing that was exempted from the ADA for a long time until a few years ago. How many of you noticed a few years ago that swimming pools at hotels started to have something that they had not always had in the past?
The chair.
They have a chair. And at one point in time, properties that were constructed before the ADA was in effect did not have to come into compliance. That has since been changed, and now they have to come into compliance retroactively. So you see a lot of hotels either adding lift chairs to their swimming facilities or closing pools altogether because of the cost of installing the chair. So those are, how people respond to these, accommodations or modifications. So it's all about providing the same level of access. And that is it for chapter 12. See how easy that was?
Travis, I don't know a lot about property management, but it seemed like when you were talking, it was more about individual owners. But what about like community property management? Are we going to talk about that, or?
You mean like HOA management?
Yes, yes.
We don't talk about HOA management. You can manage HOAs with a real estate license, but it's not something we talk about at all in the course material.
So we don't need to know anything about that.
Mm-mm.
Good. Thank you.
Yeah, it's such a niche thing that it's just not something they put in the materials.
I'm glad. That would be complicated.
It is complicated. There's a lot that goes into that. All right, so we're going to move right on to chapter 19. If you want to go ahead and get your slides out for chapter 19, which is the fair housing chapter. And I jump ahead to chapter 19 here because it makes sense to talk about fair housing right after we talked about landlord and tenant and property management. Because I will tell you that there are lots of more common issues with rentals than there are with sales when it comes to fair housing issues. Do y'all have like pictures of me in your slides for this chapter? Why are those in there?
Yeah.
So I have no idea why.
I might have thought it was fair housing.
Well, maybe it was. Maybe I was determined that we were going to talk about fair housing. I guess. I have no idea why those are in there. That's so.
Travis, what happens when a business does not comply with the rules for fair housing? there's several that Brittany can think of that do not have access points for wheelchairs.
They don't comply with ADA access rules.
Yes.
Because if they're public facilities, they wouldn't have to comply with fair housing. They would have to comply with the Americans with Disabilities Act. If someone were to file a complaint against that property owner or property manager, then the United States Department of HUD, Housing and Urban Development, which enforces the Americans with Disabilities Act, would come in and investigate that complaint. Also, the North Carolina Human Relations Commission could investigate that complaint and potentially fine either the landlord or the property manager or the owner of the property, depending on. And remember, just because they don't have a physical modification like a ramp doesn't mean they haven't somehow figured out an accommodation. But there are also lots of properties that are in violation too.
Because I was just thinking of my school, for example. Like, teaching in a special needs classroom, I have kids in wheelchairs. I have kids who have, mobility issues. And like, when I first started teaching there, I had to go to my principal and was like, hey, I have a student whose chair is very wide and they don't fit through the door. Like, they don't fit through any of our door frames, and we're having to literally